Tesla's on its way to a major comeback, says Dan Ives of Wedbush Securities. In his typical way, Dan uses colorful language to explain why. He says Tesla's Robotaxi Day in August will be a historic moment for Tesla and Elon Musk. And with an election year upon us, Dan also commented that a Trump presidency would at the end of the day be bullish for Tesla while it'll be negative for electric vehicles. I've got Jeff Lutz joining us. Jeff is a multi-decade supply chain executive and chief quality officer, and now he's the CEO of his own high-tech manufacturing firm. Thank you so much, Jeff.
Yeah, great to be with you, Herbert. We had to get the color out for a Dan Ives conversation. You've got the pink shirt. I've got some color on, and I think it's appropriate.
I am more colorful than you are, but yes.
Yeah. What I have to say is Dan is very well connected in the actual Tesla community. He reads the commentary on X. I know he watches a lot of the videos. And again, we talk about the business and kind of the technicals behind the business and what's going on with the business and where we see the business going. And then he does his own thing in terms of thinking about the stock, the equity, and the valuation of the company and how it's perceived on Wall Street. And as he talks to clients, but we talk through the business and kind of what we see happening in the business, and then he does his own thing. It's interesting to see.
Yeah, and he does like you and he communicate. And then I've interviewed Dan myself. Great guy. He's going to show up in a few of our spaces, a few more shows. But yes, we like Dan because he's a bullish. He's always been a bull for Tesla for a long time. And I think of all the analysts, I like him the best in just the way he thinks and the way he comments. But he's also super bullish. So maybe I'm being, biased about that.
Oh, he listens too. He listens.
So let's listen to what he's now saying. He was interviewed by CNBC, and he was very negative in the last several quarters because of the way that he saw Elon and the team presenting on quarterly reports. He kept saying that Tesla just keeps to shoot themselves in the foot because they would just screw up these quarterly earnings calls, and they would say things that are just not what the investor community would want to hear. But now Elon just knocked it out of the park. The last earnings call, Dan is becoming much more animated. So here is his comment. We continue to believe that Tesla is more of an AI and robotics play than a traditional car company. I like this. Robotaxi Day in August is a historical moment for Tesla. So before I play his video, what do you think about that, Jeff? Because there's this debate, even among us Tesla community people. Some people say, hey, don't get your hopes up. This is just another presentation. Every time there's a presentation like this, the stock always falls. Gets excited. We get excited, but not investors or anybody. Other people are saying, no, this one's different. This is a historic day. This is the transformation of Tesla from a car company to a robotaxi company. Even if you don't get blown away by what happens, it's still a very important day. What do you think, Jeff?
There are going to be people that play, the options market. They're going to have us, sell the news mentality, or they could get caught, or there could be an announcement that day. Again, I go back to my vision for the day is Elon walks out on stage, pulls his phone out. I was going to say Tesla phone. He pulls his phone out, launches the Tesla app, and there's one button to press to hail a vehicle, and the prototype of the Cybercab pulls up on stage. Doors open. Either people get out or he gets in, and that's point one of the event. Point two is going through the details of the actual Cybercab itself. I don't think it'll be ready for production, but I think there's a material story. There's a design story. This is the vehicle I believe Franz said he was most excited about from a design perspective, because it's really ushering in a new type of everyday vehicle for the road. Like, it's not just designing the next passenger vehicle with steering wheel, emergency brake, so forth. This is a new type of vehicle. So I think they're going to show the Cybercab, and there's going to be a material story both on the outside and the inside of the vehicle, an ergonomic story, a cost story. I think the vehicle will be in kind of a cost per mile. And then finally, I think, and we don't agree on this, but obviously I think Tesla may, indicate that they want to start with a supervised ride-hailing network and just to work the kinks out of that last 50 feet of, when you're on FSD and you're driving to your home address, sometimes it does different things to get onto your driveway. And I think, Tesla really wants to work out like, what is that very smooth experience to both approach a customer and pick them up and to exit and depart on a journey. So I think there's, could be three things coming. It could be a sell the news event. Tesla's doesn't have a flair for the theatric. A lot of people have been laid off that kind of work in the event side as well. But the technical side of this, in terms of the buildup to this event, whether it's the 12.xx series and its evolution, whether it's buying all the compute and its training ability and that evolution, the patents we've seen now for the cleaning of autonomous cleaning of the vehicle, this Travis Kalanick file, like all these threads are starting to kind of form. And so, I mean, it's a bit undeniable about what's going to happen. It's a question of, is the whole story kind of brought together, and what's the timeline for that story rolling out?
Okay. So we're going to go ahead and play Dan Ives' video of what he said. But so just to clarify what you were saying, so you think that there's going to be potentially an announcement of a Tesla network, which is ride hailing with supervised drivers. So you own a Tesla, somebody orders your car, but you are there. You're going to be like an Uber driver if you wanted to be. The fact that Elon followed Travis Kalanick, who's the ex-co-founder of Uber, we did a show on that just now. That could mean that what you're saying, right? Because his expertise is in supervised driving. So we'll see what happens there. Let's listen to what Dan Ives says. Play this and get your reaction to what he's saying.
Now is the aforementioned Dan Ives, managing director, of course, at Wedbush. What do you mean the recovery story has begun?
The comeback story for
Did it
Tesla.
need a comeback?
I think it did, because they had massive headwinds in China, and now we're seeing the comeback play out. Now, 2Q deliveries next week, I think that's really going to be the last of really some of the worst that we've seen in China. We're starting to see a mini recovery in China. The comeback kid story for Musk is starting with, of course, Robotaxi Day in August. I believe this is a stock that's going to have a massive run second half of the year.
What do you think?
Okay, pause it there, Jeff. What's your thoughts on what he just said?
Yeah, I think it's this tale of two halves. I think he's talking about of kind of, all right, there's been this convergence that's occurred in terms of, the margins, the units, and really this compression it's honestly taken over a year. But what you've seen recently from Tesla is you've seen them get away from, MSRP erosion, because they're going to need to keep a gap between, and my theory is they're going to need to keep a gap between like where the current 3 and Y are, and then where the new variants that they introduce, maybe in, 6 to 8 months, those new variants, they're going to need to keep an MSRP. They can't just keep taking the 3 and Y down from an MSRP perspective, because they're going to launch new vehicles that are going to run below them from an MSRP perspective and from a cost perspective. So you're seeing this convergence occurring. They've also, I mean, it seems like it was ages ago, but it's all hit this quarter. They did probably north of 14%, headcount reductions. And that is significant from a cost side, both on the OpEx, the operating margin side, and on the COGS side, because there were reductions in the factory to kind of, as they drive more capital efficiency, as they drive more labor efficiency in the factory, you don't need as many people to produce, the same number of vehicles or more as they get more efficient. So they also took people out of the factory side. That will impact COGS. That'll impact gross margins. So there's a lot of puts and takes here. There was a lot of inventory also from the first quarter because of the supply disruptions in the Red Sea and Berlin. And then you had the Model 3 introduction, which again, we have to be very, upfront on this, that crossover in North America wasn't handled extremely well. When you phase out an old product and you bring in the new product, you need to have enough supply of either so the market is fed. And the market wants 50 to 60,000 Model 3s in a quarter, and they were only giving 12,000 in the first quarter. So there was, and I've said this multiple times, there were a lot of explicable things that happened in the first quarter. Days of inventory, I think, went up to 26 to 28 days. That's high for Tesla. That's nothing for the industry. that's still best in class. They're going to bring that down. I think they burned off a lot of that inventory in Q2. They ramped up the Cybertruck. They probably doubled the output of the Cybertruck from the beginning of the quarter to the end of the quarter. That's a big move in one quarter. Cybertruck's moving up, burned off inventory. They reduced headcount. So there's going to be a lot of puts and takes here. I think it's going to be a difficult quarter to call from an earnings perspective. But this delivery announcement, I think, is going to be somewhat key. But the delivery announcement versus the 8.8 announcement, so the production delivery announcement that's occurring basically now, and then the 8.8 announcement, they're two very different things. I think before, the company used to hang very tightly to what happens every 90 days with that delivery announcement. And now it's like, okay, that company and this new company are actually two different things. And there's a little bit less of an emphasis. I'm not saying it's not important. It's just reduced in emphasis in terms of deliveries versus 8.8. 8.8 is the launch of the new company, I believe.
Love it. Historic day. Let's listen more to what Dan is saying.
Has been then that headwind that you talked about? Is there one thing you could point to?
Look, EV demand's clearly been soft globally, but it's really about China. I mean, China was a massive tailwind for years, became a headwind, but now, Brian, you're not seeing those price cuts anymore. So you're starting to see stabilization, China demand starting to increase. And I think the stock's telling you, and we believe next week's just another sign of it, is that the worst is in the rearview mirror for Musk and Tesla.
I want to go back and hope you don't mind. You're a good guy and you roll with things. You heard the top of the show, okay? And I built these Trump and Biden portfolios, and I had, in my original one, I had Tesla because I thought we decided, we're not really sure. With Tesla, if Trump wins and rolls back some of these EV financial incentives, don't know if he will, but let's say he did. Would Tesla have a natural advantage over its customers because of its price point? In other words, are they kind of, dare I say, a Trumpy portfolio type company?
Oh, I'd say, Trump pro-Musk, and I'd say it's bullish. A Trump presidency would, at the end of the day, be bullish for Tesla, negative for EVs. Then we saw that when you showed that across Rivian and others. And I think it also speaks to the Biden administration. Musk has really been an afterthought. In a Trump administration,
well, he's been actively ignored.
Actively.
President Biden, I think 2 weeks ago, tweeting out something like, "We're going to make EVs in America," and like he got ratioed, and people are like, Tesla, and already does.
And I think if Trump's in the White House, Musk gets more front and center. That's bullish for Tesla, especially if you start to see those EV rebates roll back. Negative for the industry, bullish for Tesla.
But that's the point. If somebody decides to buy an EV Silverado from GM, in part because they get $7,500, right? If that goes away, they might say, I just can't pay for that. I'm going to go with a Model X.
And they've already scaled. If you look at their scale and you look at their pricing, they are in a massive position of strength. And that's why I think as you start seeing more signs of Trump presidency, that is bullish for Tesla.
Yeah, so it's an election year, and we need to work this through. What will happen? Do you agree with what he said? Trump will be good for Tesla, bad for electric vehicles.
I do. I think the first off, there's they talked about Elon being actively ignored. Well, he was ignored in terms of adulation and congratulation for basically leading the world to EV, but he was not ignored. He's not being ignored on the investigation side of really multiple agencies coming after him. So I think a Trump presidency there would be good. I think, the two have had not a perfect history together. They've been, kind of openly constructive of each other in the past, but you can tell in the last 3 months or so that, they've met and there's some convergence on what needs to happen. And this is what's not widely known. And Elon's on the record. There's video of this. Elon, when the Inflation Reduction Act was being discussed as a bill, and Elon was asked by the Wall Street Journal reporter, this is the live interview of what do you think of this? He goes, I don't think we should do this. I don't think we should add more spending. There's no funding. And she was asking about chargers. She was asking about vehicle incentives. And he's like, Should we be, should we be doing incentives to build more gas stations? No. So Elon has actually been anti-government incentives for EVs. Now, in the beginning, call it 10, 15 years ago, Tesla did utilize government incentives, again, in a short-term loan that they paid back early with interest to the government. So I think there is an appropriate time for the government to, say, hey, look, this is the future, we need to invest in it. My take is the following. EVs are the future of automobiles, and autonomy is the future of automobiles as well. And for the US government to not see that and to allow China and then potentially a fast follower in India and maybe some other major country to take the lead away from the US, which China already has in EV production, and let them run away with the industry. Remember, the EV industry is more than just assembling cars. It's all the technology, the supercharging infrastructure, it's all the materials and minerals that are behind it. And the US already fell behind in this, over the past decade. If it weren't for Tesla, they would be absolutely nowhere. Just look at where GM and Ford are. They don't have a consolidated, serious effort anywhere. So Elon's been on the record. He's very clear. Don't do the incentive. He's been building Tesla to function and be profitable without these added IRA incentives. And I think Tesla would do fine because they've operated on fundamental, solid theories of supply chain, of localization, of network latency reduction, of building your supply chain around your consumer base. These are fundamental axioms that will allow them to build the lowest landed cost product. And of course, what they've done from a design for manufacturability perspective, from their simplification and simplicity culture, these are all things that in the end will allow an EV to be produced for less cost than an ICE vehicle. And remember this, ICE is in a net negative year over year. And even ICE plus hybrid, I think, is even flat year over year. As those numbers, and they're overcapacitized in the auto industry, as those numbers continue to come down, the fixed assets and capital are still there. And therefore, ICE has actually become more expensive to produce over time versus the value the consumer gets. And as EV production grows, EVs are going to become less expensive to produce. So we're about to cross that line. And so my message back to, if Trump were to win, I would hope they would take a very hard second look at making sure that while you don't need to have massive incentives all over the place, to make sure that U.S. manufacturing is set up so there's no major competitive disadvantage with the rest of the world. By the way, I think the Trump presidency believes they solve that with tariffs. But the other thing you have to solve for is, instead of just playing defense, you also have to solve from an offense perspective. And are you building the supply chain so that you can build these things here and do it effectively, and then eventually become an export hub for this technology? So that's the key. Trump and Elon have moved closer together in terms of at least having conversations. And I think, I think when the dust settles, maybe a year or two from now, who knows who's going to win the presidency? But I'd hope there'd be some level of understanding that we need to have leadership in EV, or we're going to lose the U.S. auto industry, because the future is EV and automobiles. And if you don't take the steps to become a leader and to at least maintain a leadership position, you're going to actually lose the entire industry, and no one will be able to produce an automobile in the U.S. besides Tesla and be profitable and be a real business.
Thank you, Jeff. It is an election year, so I think it's important to make comments and to think this through. I've got a kind of a negative perspective or comment on both parties. The first one is, it wasn't just ignoring. The Democrats attacked, and they're attacking. And that is dumb, not very smart strategy. Don't know why they're doing that. On the other side, Trump seems to say whatever he wants to say. So he'll say, Elon, you're my best friend, we'll do whatever. But then you listen to his other, stump speeches, and he says other things. So
All over
we'll
the
see what
place,
he ends
yeah.
up there. Yeah. Okay. So get back to just ending on this whole thing about 8.8 becoming historic for the company, that we're in a turnaround, this comeback. Yeah, it sounds like you think that even on all fronts, right? Even the way you were talking about the cost and all these things that happened in the first quarter, the next 2 quarters here looks like it's going to be better for even just automobiles. And yet there's a historic things. Just final comments on what you're expecting for the second half of this year.
I think it's going to be exciting. I think it's going to be bumpy, but I think this is kind of I think they are shoring up the hardware portion of the auto business. I think the energy business is going to continue to improve. You see all the contracts that are flowing through on the energy side, but it's going to be bumpy and exciting because you're going to see this relaunch of like where the company is actually going. But Tesla has to invest a lot of money, and they may actually have to raise more capital. We'll see, to keep this compute power growing. They're also going to have to build new vehicles. Now, they've helped with on the investment side of building these new vehicles by utilizing the 3 and Y manufacturing lines. That's going to help the cost structure of the 3 and Y. It's going to help the cost structure of these new vehicles they build. And they're going to pull forward the module side of Unboxed. Remember, Unboxed is inputting modules into your factory flow process, assembling them in more of a parallel manner, utilizing less floor space, being more efficient. And they're going to pull many of those modules, whether it's that lower cost electric motor, whether it's a 48-volt system, they're going to pull those forward. They're going to ramp them into getting to peak volume on these new vehicle types that are before the next gen platform, so that when we get to the next gen platform, these modules are already going to be at their low cost level. So they've actually de-risked the next generation platform by what they're doing with these new vehicles, but they're going to have to invest dollars. Any new product launch means you're buying tooling, you're buying capital ahead of a ramp of vehicles that have not been delivered yet. So you're going to see cash burn, and you're going to see some inventory build and it's invariable. It happens anytime you do a new product ramp. But what's on the other side of that is, what you'll see in 2025, in 2026. I think you're going to be at you're going to have, here's what the other side looks like. You're going to have these new lower cost vehicles before the next gen platform that could be several $1,000s cheaper to build, and therefore they can take another leg down in MSRPs. You're going to be that much further along on full self-driving, maybe, unsupervised at that point. And then you're going to be on the cusp of ramping the Cybercab, and forget about, we can talk about Optimus on an entire show, and you're going to be that much closer to that as well. So the other side of this just looks tremendous. It's a question of, between now and then, like, what are the moves Tesla has to make financially and operationally to get themselves ready? So I think people just need to be ready for that. It's going to be exciting, actually.
Yeah, next year, a lot of things are converging, and that's going to be the year to look for. And this transition from a automotive company to an AI robotics company is happening now, and we'll see. It'll be more solidified by next year if Tesla truly made that. Thank you so much for your advice and your comments. Follow Jeff on X at the Jeff Lutz. Thanks, everybody.
Thanks, Herbert.
Bye-bye.
Thanks, everyone.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.